जी अस्सलाम वालेकुम जी, आवाज आ रही है आपको? आई एम ऑडिबल? जो पार्टिसिपेंट हैं जूम के थ्रू उनको मेरी आवाज आ रही है?
सर आवाज आ रही, क्लियर है।
चले चले हम स्टार्ट करते हैं। कॉर्पोरेट ब्रीफिंग सेशन 2025 का ये है।
Recording in progress.
टेबल ऑफ कंटेंट्स है, कंपनी प्रोफाइल के मुताबिक हम डिस्कस करेंगे, कंपनी ओवरव्यू एक आपको देंगे, की स्ट्रेटजिक इन्वेस्टमेंट डेवलपमेंट के मुताबिक डिस्कस करेंगे, देन फाइनेंशियल हाइलाइट्स, परफॉर्मेंस एनालिसिस and there are the challenges and potentials. So first of all, company profile जो है, company about 38 years before incorporated हुई थी 1987 में, और right now ये 2200 workforce हमारे पास है और 30 countries के अंदर हम export कर रहे हैं इस वक्त, और $110 million जो है वो हमारी turnover है जो हमने almost achieve की है। कंपनी के 4 मेजर सेगमेंट्स हैं, एक वीविंग सेगमेंट है, एक डाइंग है, देन अभी रिसेंटली हमने एस्टैब्लिश किया अपना फिनिशिंग अपैरल का यूनिट, और इसके अलावा हमारा एनर्जी का सेगमेंट है जो कि इन हाउस इलेक्ट्रिसिटी, स्टीम और हीटिंग की रिक्वायरमेंट को फुलफिल कर रहा होता है। हमारे पास इस वक्त जो सेगमेंट्स हैं उसको फर्दर डिटेल में देखें तो वीविंग सेगमेंट के अंदर 55 मिलियन मीटर्स की हमारी कैपेसिटी है क्रेप फैब्रिक बनाने की। इसके अलावा वाइट एंड डाइड फैब्रिक की 45 मिलियन मीटर एनुअली हमारी कैपेसिटी है, और जो रिसेंटली हमने गारमेंट यूनिट एस्टैब्लिश किया है उसकी 5 मिलियन गारमेंट्स की इंफ्रास्ट्रक्चर हमने उसका डेवलप किया है। और इसके साथ हमारे पास जो इस सबको सपोर्ट करने के लिए 20 मेगावाट का इन हाउस एनर्जी जनरेशन है जो कि डिफरेंट मिक्स है, जिसमें सोलर भी है, गैस बेस भी है, और बैकअप के अंदर फंडासाइल फाइल भी है, और ग्रिड का लेस पावर कनेक्शन भी हमारे पास अवेलेबल है। इसको फर्दर हम आगे इन डिटेल में अभी डिस्कस करते हैं वन बाय वन। सो फर्स्ट ऑफ ऑल वीविंग डिवीजन ये हमारी 1990 में स्टार्ट हुई थी और 48 रूम्स हमने इंस्टॉल किए थे। राइट नाउ हमारे पास 272 हाई स्पीड एयरजेट वेपियर जैकार्ड लूम्स हैं जो कि मोर देन 55 मिलियन मीटर्स एनुअली ग्रे फैब्रिक जो है ना प्रोड्यूस करती हैं, और उसमें से पार्शली हम अपनी ही जो डाइंग डिवीजन है उसको ग्रे फैब्रिक देते हैं फॉर डाइंग के लिए, और बाकी का हम एक्सपोर्ट कर देते हैं यूएस के अंदर, यूरोपीय यूनियन के अंदर और एशिया के अंदर। ये नीचे कुछ ब्रांड्स हैं जिनकी मशीनरी पिकनल, एटलस काप्को, स्टॉबली, कार्लमेयर, मारियो प्रोस्टा, ये इन ब्रांड की मशीनरी जो है ना हमने वीविंग के अंदर इंस्टॉल की हुई है। नेक्स्ट सेगमेंट हमारा है वो डाइंग एंड फिनिशिंग का है। हमारा स्टार्टिंग पॉइंट यान होता है, यान हम बाय करते हैं और वीविंग के अंदर हम उसे वीव करते हैं, देर आफ्टर वो फिर डाइंग एंड फिनिशिंग मिल में जाता है। ये हमारी मिल 2002 में एस्टैब्लिश हुई थी, और इसमें अंदर कॉटन ब्लेंडेड फैब्रिक्स, कैजुअल वियर और ये चीजें हम बना रहे होते हैं, और इसकी कैपेसिटी 45 मिलियन मीटर्स ऑफ डाइड वाइट प्रिंटेड एंड यार्न टाइप फैब्रिक जो है ना वो हम इसके अंदर प्रोड्यूस कर रहे होते हैं। और ये कुछ ये जो ब्रांड्स आ रहे हैं
So ये हमारी डाइंग एंड फिनिशिंग डिवीजन है, which was set up in 2002, and this one is basically making dyed white and printed and yarn dyed fabrics for our export customers. The total capacity is around 45 million meters per year, and a certain amount of the fabric is exported, while certain amount is used now upstream by our apparel division, and some of it is going to local garment factories and local customers within Pakistan. तो नीचे आपको हमारे टेक्नोलॉजी पार्टनर्स नजर आ रहे हैं. They are state of the art technology for this kind of product, and we specialize in cotton blended fabrics which are used for casual wear and fashion industry. This is our energy division, which was set up in 2003 to deal with the challenges of power supply. As you know, Pakistan has a severe energy crisis, and most of the textile industry is on self-generation. So we have multiple sources, including gas, solar, and biomass. So even though the total energy demand of the company is around 7 to 8 megawatts, depending on the season, we have an installed base of around 20 megawatts electric and 30 tons per hour of steam. And there are multiple backups depending on whether gas pricing is more viable or biomass is cheaper. Article, solar is a no-brainer, so we've gone very intensively on solar, and we'll talk about that in the coming slides. So this is our newest division, as discussed earlier, that we just started operations in the first week of September 2025. So up to now, iska koi revenue nahi aaya in our top line, and in the next quarters, you will see that revenue from the apparel division will start to show in the top line, and we'll talk about that in more detail in the next section. So generally, the concept is that our customers are all brands sitting outside of Pakistan, top customers like Levi's, Inditex, CNA, Decathlon. They need garments. First, the business model was that they would place the fabric price with us. It would be locked in US dollars. And then they would tell us at the time of shipment where they want fabric to be shipped. That could be in Bangladesh, that could be in Vietnam, that could be in Cambodia. And after COVID, more and more it started to get placed in Pakistan. So because the customer wanted to reduce the lead time, reduce the shipping cost, so the garments were being made more and more in Pakistan, even though the pricing was still in US dollars. We were shipping it in Pakistan, jiski wajah se hamari direct exports kam honi. The other, primary reason behind this decision is that the customers don't want this broken up supply chain anymore. They want fully vertical partners where they are getting the fabric, they're getting the garment, everything under one roof. And so around 2 years ago, management took the decision that we need to invest into our own garment division. So the first factory is online, which has an annual capacity of 5 million garments. And it's going to serve new customers who are garment customers and our existing customers who are buying fabrics from us and making the garments elsewhere. So our long-term roadmap, part of our Vision 2030, Vision 2035, is that we have to fully transform ourselves from a fabric mill to a garment producer. So our current fabric capacity is around 4 million meters per month in the dyeing factory. अगर हम उसको garments per day में convert करें, so that's about 90K to 100K garments per day. Of that, this first factory is around 17 to 20% of that capacity. So the long-term roadmap is over the next 10 years that we have to ramp up this capacity and build 5 factories of this scale and fully convert all of our fabric customers into garment customers. In terms of technology, this is a very, very modern factory. It's platinum LEED certified. There's an example of the technology partners that we've used. Very high on automation compared to other plants in Pakistan. There's automatic cutting, end-to-end hanger system. All of this enhances traceability. It reduces WIP. It gives you more control, more real-time data. So since we are starting a greenfield site, we went for top of the line and latest Smart Factory 4.0 concept, and we'll talk about that also as we go on in the presentation. So these are some of our customers. Currently, these are our fabric customers who we are targeting to bring them on board for garments also. There is a varied geographic mix. We have about 30 to 35% USA sales, which is US-based customers. Those shipments could be going to USA, or they could also be going to Pakistani or Bangladeshi garment factories for US customers. Then around 35 to 40% is Europe, which is Europe direct sales, plus European customers that are making garments in other third garmenting countries. And then lastly, we have about 1/3 business which is spread out in all other markets: South America, Africa, Oceania, Russia, these kind of places. And as you can see that all of these brands are very well recognized, and we have a long-term, more than 20-year relationship with them. So the challenge is not to bring new customers. The challenge for us is to convince these customers, give them good service, and onboard them on the next step of the vertical journey, which is garmenting. So I'll go to the next slide. So Kohinoor is operating in 5 product verticals. So the largest product vertical is Western fashion. This is about 80% of our revenue. The types of products are bottom wear, chinos, cargo shorts. We're also doing jackets, light weight fabrics for tops. The second biggest category for us is ethnic, which is for ethnic brands within Pakistan. This is around 10% of our revenue. And then the last 3 categories: workwear, technical textiles, and upholstery. These are all new categories that are growing for us, both in fabric and in the final product. And the combined revenue for these 3 categories is around 10%. So right now it's a small part of the pie, but our long-term game plan is that we want to balance our sales. We want to have sales across all 5 product verticals, so that the seasonality, trends of fashions, the type of customers are more diversified, and there's more stability in the sales pipeline. So sustainability is a big focus for our company, both because our customers demand sustainability. Western consumers are very conscious about it, and also because it is our responsibility as an ethical company. And most interestingly, being sustainable in 2025 is actually more financially viable. So solar energy is cheaper than all other sources. Biomass for our heat needs is cheaper than coal and other gas, hydrocarbon-based fuels. So we're proud to say that as of today, 83% of our total energy is generated by renewable sources. When we say total energy, it means electric plus thermal. So that is grid independent. It gives us the ability to control our prices and give our customers green product. 30% of our wastewater is reused in processes, and again, this number is also going up. Our customers have target to eliminate liquid discharge by 2030, and we have a state-of-the-art effluent treatment plant that is cleaning anything that we are discharging out of our factory. 100% of our waste is diverted from landfills. And you can see on the bottom, these are some of the certifications we have that are essential to do business with global companies. So for this year, there are a few key strategic and operational developments. The first and most important one is that we have started our apparel division, which, as I explained earlier, will allow us to fully leverage the advantages of vertical integration. It is designed to meet the fast evolving requirements of modern fashion and retail markets. The facility has an installed infrastructure of 17,000 garments per shift per day. But garmenting is an incremental business. You don't go on the first day and try to ramp up the factory. It's the customers have to be onboarded. There are certain compliances, and then we have a phase-wise ramp up plan. So phase one is around 5,000 garments per day, which is already live. The projected revenue is around 12 million US dollar. All of the capex and working capital has already been injected into the company, and we'll start seeing the impact of the revenue. Phase two is when we will go from 5,000 to 10,000 garments per day. Revenue generated from that will be in total of $40 million. The incremental capex, both for working capital plus capital expenditure, will be around 1 billion rupees. The building and allied infrastructure is already there. This is just the capex for the additional stitching machinery and the working capital required to feed the lines. And the third phase, when the whole building's capacity will be utilized, going from 10,000 to 17,000 garments per shift per day, will give a top line of $72 million by double shift operations. That's also part of our plan because the depreciation and financial cost is being charged on a 24-hour basis. So generally, the garment industry in Pakistan is working in single shift, but more progressive companies are working on double shift operations already. So there will be no additional capex required other than working capital. So after all three phases are completed, our target is mid 2026 or somewhere around then. We're targeting to get into phase three. So the second area where there's been a lot of investment in the company has been renewable energy and energy independence from the grid. So we have already installed 4.5 megawatt solar, and an additional 2.7 megawatt is under commissioning already on the roofs of all the factory premises. That will be completed by the end of this month. And there is an additional 3 megawatt planned for quarter 2 and quarter 3 of FY26. This will result in energy savings for us and help us reduce our costs, as we know that grid and gas-fired generation in Pakistan is very expensive. Solar already accounts for 20% of our total electricity demand. As we ramp up more solar, more of the ratio will change towards solar, and then lower energy costs and reduced exposure to government-related tariff risks, as we will be more and more independent. Another area where we have made a lot of investment is biomass-fired oil heaters. That is basically used. Heat is used in the company in two areas. One is steam for process use, and one is oil heating to heat the machines that are used to dye the fabric. So this is a very big chunk of our energy. As of today, our thermal oil heater has been commissioned, and 95% of our thermal energy for oil heating and for steam use is coming from grid-independent renewable energy, which is biomass. As you know, in Pakistan, farmers used to burn the crop residue after the harvest. Now there's a very strong and robust supply chain where farmers are incentivized and paid for that leftover residue, which is then transported to factories where they burn it in boilers or oil heaters. This reduces the overall emissions, carbon emissions in Pakistan. It creates livelihood and income for rural economies, and also reduces the cost of our heating needs, because biomass is cheaper than alternatives like coal and gas. The third announcement for the last year was that we have successfully completed our stock split. The company has split its shares face value from 10 rupees to 1 rupee each. We've seen noticeably higher daily trading volume. The rationale behind this split was to increase the liquidity and accessibility of our share. And based on the first 4 to 5 days of trading volume, this has been quite a big success for us. These are financial highlights for the last 2 years. Turnover in 2024 was 29.85 billion. 2025, it's around 27.14 billion. The reason for slight reduction in turnover is international raw material prices. Cotton was at a much higher level. Oil and cotton, transportation, all of these factors are baked into our final FOB prices. And even though our volumes are stable, there has been reduction in the selling price due to commodity movements. Gross profit this year was 3.61 billion, last year was 4.24 billion, and the bottom line this year is 233.5 million, whereas last year there was a loss of 19 million. And the earnings per share basic diluted is 0.46 this year, last year was negative 0.04. These are some key performance indicators for the last 3 years. On the top, we have GP margin, which has reduced from 20.8% to 14.22 and now 13.32. There are a couple of factors behind this. First was FY23, there was rapid devaluation. Since we are an exporter with a high chunk of dollar-denominated sales, that directly translates into our GP margin. This is an exceptional year where this margin was elevated. Long-term trend is around 15-16%. If we look at the last 2 years, there's a declining trend because the textile sector in Pakistan has been under pressure due to high energy costs and certain tariff-related challenges in global markets that has put pressure on prices. We foresee that in the coming year, there will be a return to our historical average or maybe even better. Net margin again is following the pre-tax margin, going from 8.69 to around 1. The net margin going from 7 to 0.86, mirroring the impacts on the GP margin. Again, for the next year, we foresee that there will be an improvement based on certain challenges in energy and tariff-related global uncertainties being resolved, and in the future, we are hearing more optimistic news from our customers and sales channels. Current ratio was 1.05, 1.01, and 0.95. Quick ratio is hovering between 0.55 and 0.50. And then in the bottom, you can see return on long-term assets, return on equity, and return on capital employed. So the previous slides were focusing on just the last 2 or 3 years. In this slide, we're focusing on the long-term growth in the top line. As you can see, in FY19-20, we were at around 12 billion. There was a rapid increase in revenue. Some is volumetric, some is due to exchange rate changes, and some is due to global commodity prices being at an all-time high. In 2024-25, there was a dip from our highest point, And now in this coming year, with the increased capacity of the apparel factory, we're aiming to cross the previous high water mark. This is our region-wide sales in FY24 versus FY25. As you can see, that majority of our sales are exports, and even within Pakistan, the number that you see, 44% versus 47%, it is showing that our local sales are increasing. But this majority of this is also dollar-denominated sales. It is because the business pattern is changing, and the brands are placing the garment orders in Pakistan, whereas in the past they placed them in Bangladesh. So now we are providing the fabric to the local garment cutters, which is priced in USD, but since they are the exporters of record, that's not counting as our exports. Once our garment factory, as revenue starts to kick in, again we'll see a change in this ratio, where our direct exports will start going up again. This is a segmented analysis of our weaving and dyeing division. In the top graph for the weaving division, you can see production volume versus sales volume. So starting in 2017, we started a BMR activity, and you can see that our production volume is going up due to replacement of old looms with new looms. Now it's around 53 million meters per annum, where it was 39 million in 2019. And as production goes up, sales is also going up, so there's a volumetric increase in this division. In the dyeing division, there is a slight dip in both sales and production. And as I explained in the last slide, the reason for this is US tariff uncertainty and buyers not being sure which countries they should source from, and a lot of orders were on hold. But now that there is a lot more clarity from the White House, we will see that the capacity utilization and the production volume for this division will also come back to its peak levels. This is sales analysis split for both divisions. The total won't add up to the total revenue for the company because it's interdivisional sales also. So we can see that in the weaving division, the sales has gone up from 6.5 billion to a peak of 19.6. Last year it was 18.1, mainly due to changes in raw material prices because capacity has been utilized fully. And in the dye house, went up from 8 billion to 18.5 billion. And then there was a dip closing at 16.8 billion. Two factors here. One is global commodity prices, and the second is tariff-related challenges with our customers, which are now being significantly improved for the next quarters. So these are the main challenges and potentials for the company. So we'll talk about challenges first. Elevated taxation and energy costs relative to regional peers like Bangladesh and Vietnam. Since we're competing in the global textile value chain, we're not just competing with Pakistani companies, we're competing with companies all around the region. And unfortunately, in Pakistan, we have a disadvantage, much higher taxation rates and much higher energy costs because the governments in those countries prioritize these industries as a way of generating employment. In Pakistan, unfortunately, policy has not been so supportive. There is market uncertainty from ongoing tariff disputes that have somewhat been removed and improved upon, but still the global trading system is going through a shock because of the way that the US has decided to start global tariff war with many countries. There are some supply chain and logistical disruptions due to regional instability, war, shipping lines are taking longer routes, the Red Sea is closed. So these things directly impact our shipping costs and lead times. The domestic cotton output in Pakistan is shrinking due to farmers moving to other crops. The peak of Pakistan's cotton output was around 13, 14 million bales. It's come down to around 7, 8, which means that Pakistan is now a net importer of cotton, and we have to import cotton from other countries like Brazil and the US. Lastly, there's a very unpredictable regulatory and policy environment. Constantly, government regulation is changing, and that hampers companies to make long-term decisions for strategy and capital allocation. If we talk about potentials, with the new apparel factory coming online, there is an expanded customer offering. We can offer our customers a full value product in Pakistan. That's going to be a big game changer in terms of us increasing our sales. Then there's always continuous projects that we are doing in the company to bring automation, to bring the technology, to bring data, artificial intelligence that will incrementally improve our operations. We're focusing on a broad and diversified product portfolio that is resistant to changes in global sentiment and global consumer choices. We have sufficient power generation with an increasing share of renewable energy, strong market presence and leadership in more than 30 countries around the world. And then largely, we have a solid and supportive group structure and balance sheet to support the company in both good and bad times. So I think that's the full presentation from us. We have a short video that we can share. Thumbs up, can we play that?
Can't hear anything. There's no.
I think it's might be because we're playing it on our system, so maybe you're not hearing the sound there. So I think since we're playing it on our screen, you might not be getting sound there. So we leave the link in the chat, and you have access to this presentation on the PSX data portal. So you can watch the video on your own time whenever you want. So I think that's the end of the presentation for us. We can take any question and answers that.
There was a question by someone asking what is the expected sales revenue for financial year 26?
इसमें so far जो obviously इसमें सब प्रोजेक्ट करना डिफिकल्ट होता है, बट वी आर टारगेटिंग कि जो हमने ऑल टाइम हाई 30 बिलियन का रेवेन्यू अचीव किया उससे बेहतर ही होना चाहिए, क्योंकि टॉप लाइन के अंदर गारमेंट की एक्सपोर्ट भी आनी शुरू हो जाएगी, तो उससे टॉप लाइन बढ़ेगी. तो होपफुली वी आर टारगेटिंग के
30 to 32 billion is the target. It's a bank. It's hard to say exactly where it's going to go. Can you hear me?
Start to check here.
Yeah, we can hear you.
Okay. So we just have one question in the chat. If anyone has any other questions, you can either put it in the chat or you can unmute yourself and you can ask the questions directly.
जी योगी सर.
Assalamualaikum.
वालेकुम अस्सलाम.
Sir, I want to ask, as you started your apparel segment right now, no? So I want to ask, when will it come in profit? So what will the contribution from apparel segment in terms of sales and profitability going forward? सर आवाज आ रही है? सर आवाज आ रही है?
जी.
Giza, मैं आपको थोड़ा सा explain कर देता हूँ. So as you rightly pointed out, that whenever a new project comes online, the revenue starts coming in immediately, but the profitability takes a few quarters to kick in. So the plant feasibility is designed in such a way that after the first 5 to 7 lines, we'll start breaking even, and after that we can generate profitability. So the target is after 2 quarters of operations, we will achieve that level of production output. So around 5 to 7,000 garments per day is the break-even point, after which the division will be profitable.
Okay. And secondly, sir, do you see any positive impact on the company as well as the country as tariff imposed by the US?
So yes, there are some positives and there are some negatives. Let's talk about the positives first. That Pakistan has a tariff rate which is very close to or slightly better than all of our regional competitors like Bangladesh, India, Vietnam. So there is no disadvantage to us. The playing field is level or slightly tilted in our favor. Secondly, the customers are looking to de-risk away from China and Bangladesh because they have too much stake in those countries. So Pakistan is part of their de-risking strategy, and they are already trying to increase their sourcing volume in Pakistan. So those are the positives. If we talk about the negatives, overall tariffs are a tax on the American consumer. So when tariff rates are high, the overall consumption of the American consumer will be reduced. So the overall buying and sales of our customer stores will be reduced. So these are the two sides to balance, that the overall sales are weak, but Pakistan has an opportunity to grab a bigger pie of the regional countries' share. I hope I answered your question.
And sir, what is the current fuel mix and what is the company requirement overall?
Sorry, can you repeat that question?
So what is the current fuel mix and what is the company requirement of fuel in terms of megawatt?
So the company's requirement is around 7 to 8 megawatts. Depends on the season and the daytime, because the power division is running in the daytime, at night it's not running. So 7 to 8 megawatts is total demand. If we talk about the electric side, the company is running on the combination of grid, solar and gas. It's a combination, because in the day we have solar, at night we have to use the grid, and it's around 20-25% solar, depending on the season, winter, summer, and the rest of it is dependent on either LESCO or the captive grid. So there is one question here. Since one of your competitors has discontinued the apparel segment and many competitors are making loss in that very segment, I would like to know your perspective on the apparel segment in Pakistan. And since the company has just started the apparel segment, what kind of opportunity the company is forecasting? Thank you very much. So I think that we're talking about Gold Emerald Textile. Just to clarify, the core business of Gold Emerald Textile is not apparel export sales. Their core business is spinning and home textile. And this was a partial segment where they were buying the raw materials from outside. They did not have an established customer base, and they were just converting the fabric into stitching garments and exporting it to abroad. Our case is very different. Since from the back end, we already have the customer base for 20 years, and they are already using our fabric and shipping it to garment factories within Pakistan and garment factories outside of Pakistan. So there is a very clear opportunity for us to grab market share from those other countries and those other companies in Pakistan. So it's a different kind of use case for them. It was a horizontal business diversification. For us, it's vertical integration. And it would be relatively easier for an existing supplier to onboard their own customers in the next step of the verticalization, which is garmenting. So first, just to clarify the two different use cases. Secondly, some companies are loss-making in this business, but within apparel, it's a very wide universe. You can be making denim garments, you can be making knits, you can be making hosiery, you can be making woven garments, which is our segment. And the companies that are operating in our segment are not losing money. In fact, the customers are looking for more woven suppliers, and they are pushing us that we need you to become a vertical partner for us. So we believe that there is strong potential in this, and we have certain advantages over other companies, like being fully vertical from the back, like already having the customer base, like being in a product category that's not saturated in Pakistan. Pakistan is saturated in denim, Pakistan is saturated in knits, and competing in a saturated market, yes, certain companies might be losing money, but good companies, even in the saturated markets like denim, like knits, are not losing money, they are highly profitable. I hope that answers your question. I think Ms. Ikra, you can unmute yourself and ask the question.
Hi, am I audible?
Gigi, we can hear you.
Yes, so I just had to ask, अभी आपने clarity दी apparel पे, I missed it a little bit. I'm very much focused towards it कि आप apparel Pakistan से ही source कर रहे हैं, because you told me that the competitor was sourcing from outside Pakistan. So could you repeat that again?
Sorry, I think you misunderstood my answer. If you're asking, since you asked this question, I'll repeat it, that the competitors were sourcing the fabric from other fabric mills in Pakistan. So specifically the company we were talking about does not have their own in-house fabric mill for fashion industry. Their core business is home textile. So they make fabric for home textile, they make finished products for home textile. They need to buy the fabric raw material from other fabric mills like ourselves. So we already have that in-house capability, and we are already supplying that fabric to other garment factories within Pakistan. So that's the core difference.
All right, thank you so much. Thank you.
Any other question anyone has?
Sir, I want to ask one more question, if you allow.
Sure. Go ahead.
Sir, I have seen your segment reporting, but I haven't seen spinning segment too. So my question is, how do you manage it?
So spinning, we are not a spinning company. We are sourcing yarn from the market. We are sourcing yarn from more than 20 suppliers within Pakistan. And also we are sourcing yarn from neighboring countries like China, Vietnam, Turkey, Uzbekistan. Wherever the yarn price is better and the yarn quality is better, we are sourcing yarn from that country or that company. So we are not bound by making our own yarn since we're not a spinner.
Okay.
Does anyone have any other questions? So if there are no other questions in the text or in the voice, for any analyst,
Sir,
then
सर अगर segment wise अगर margin का अगर आप outlook बता दें
sorry, repeat कीजिए the question.
segment wise margin का outlook अगर बता दें going forward.
Segment margins. Segment wise. Okay. So segmented number है.
8 to 10% इसमें मैं explain कर रहा हूँ. It's not obviously in future को predict करना is very difficult in textile sector, लेकिन weaving segment के अंदर हमारा 9% का gross profit margin था. Hopefully slightly better होंगे. Weaving time में भी हमारा जो margin है जो last year है, we are expecting के ये उससे में improvement आएगी. तो both segment के अंदर जो last year हमारा margin से उसमें we are seeing के इसमें further improvements होंगी.
I think we can give some general guidelines about GP margin because this is also material public information. So there will be improvements from last year, but a specific number to pin it down it's hard because there's many variables involved. But the average for the last 4 to 5 years is around 15-16%. I think it could be reasonable to achieve that again. यहाँ पे तारिक साहब का question है what is the expected EPS for 2026? That's unfortunately there are certain restrictions from the stock exchange and we cannot disclose material public information without board resolution. So I think I cannot answer this question at this time.
फर्दर भी अब जो भी क्वेश्चंस हैं हम अभी मीटिंग इसको क्लोज करते हैं तो वो आप ईमेल करके कंपनी सेक्रेटरी को आप उसका आंसर ले सकते हैं.
सर अप्रैल सेगमेंट के अंदर में आप गोइंग फॉरवर्ड मार्जिन क्या देख रहे हैं मतलब अप्रैल सेगमेंट के अंदर में जो हम दूसरी कंपनी से बात करते हैं वो कहते हैं कि 20% से अबव भी अप्रैल सेगमेंट में होते हैं मार्जिन.
अगर आपको मैं इंडस्ट्री नॉर्म बताऊं because obviously we are in startup phase so we are not going to achieve those results overnight. It will take a few quarters but the industry target जिसके ऊपर प्लान की basically it's between 20 and 22% GP margin for apparel segment and net margin for apparel segment अगर आप market competitors का देखें well run companies is between 7 and 10%.
ओके सर लेकिन इंटरलॉक का अपैरल सेगमेंट है मैं नाम ले लेता हूँ कंपनी का वो तकरीबन 1 साल तक तकरीबन हो गया है सही ना. वो अभी भी एक्सपेंशन में ही है लेकिन बहरहाल उनके मार्जिन अभी तक ग्रॉस मार्जिन मतलब पॉजिटिव नहीं हुए हैं. तो आप 2 क्वार्टर में कह रहे हैं अगर उनका 1 साल तकरीबन हो गया है बहरहाल उनकी एक्सपेंशन के ऊपर एक्सपेंशन आ रही है लगातार.
जी मैं थोड़ा सा इंटरलूप से केस मुख्तलिफ एक्सप्लेन कर देता हूँ कि इंटरलूप इज स्टार्टिंग विद अ वेरी हाई कैपेसिटी एंड टू फिल दैट लेवल ऑफ कैपेसिटी यू नीड gigantic customers and those customers take time to onboard. We are starting with a very different strategy which is incremental growth, organic growth. They are going for inorganic growth. They are starting with very large production capacity and then they are taking time to fill that up. Our approach is organic growth. So we are targeting the first phase 5,000, try and break even at that. Then after our breaking point, go for the second phase, which is 5,000 more, fill that capacity, then go for that break even, then go for the next phase. So there are two different approaches with which we are going for our expansion and they are going for their expansion. Second point, their product is very different from us. They are in two segments, knitted apparel and denim. We are not in either of those segments, so the market dynamics are very different. We are in woven apparel. Third point, for these two segments, Interloop is a new market entrant. They are specialized in hosiery. They are specialized with athletic wear customers. They do not have a customer base of denim or knitted apparel for which they have put very large capacities. Kohinoor is in this product segment for last 20 years. We already have the customers and we are going for a very slow and steady approach of bringing small capacity online and filling that capacity before we go for the next incremental capacity jump. So these are the market conditions for these two projects are very different. Apparel is an umbrella term. It's more important to understand the intricacies of the product and where the company can contact our company secretary, Mr. Rizwan, or you can consult our website and annual report, plus corporate briefing presentation. All of this information is available on our website. Thank you very much for your participation and hope to see you next time.
Recording stopped.